Hey, everybody, welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping small and medium sized businesses and their owners re-domesticate out of high tax jurisdictions like New York City. Today, I am analyzing a Wall Street Journal article dated February 17th entitled Mamdani warns of nearly 10% property tax boost if no tax on wealthy. Authored by reporter Joseph de Avila, it details New York City Mayor Mamdani's push for higher taxes on corporations and even small and medium sized business owners to fund his fiscal 2027 budget, or face a drastic nearly 10% property tax hike citywide. This ultimatum is accelerating the exodus out of the Empire State, making redomestication to Florida or Texas not just appealing, but urgent for businesses seeking stability. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, Mamdani, in his Tuesday budget proposal, failed to sway Governor Kathy Hochul on increasing corporate or wealth taxes. So he is floating a nearly 10% property tax jump as a self-described drastic measure to plug funding gaps. This would hit commercial properties hardest, adding millions to landlords' bills and passing costs on to tenants. Think about a midtown office tower facing $1 million a year more annually in property taxes. The landlord is not going to eat that cost. That is going to be passed through in the form of increased rents. The mayor prefers taxing the wealthy, but warns without it, everyday New Yorkers will bear the brunt. Critics like the Real Estate Board of New York call it a recipe for further capital flight, as combined state and city rates already top 10.9% on income, with property taxes averaging $5,000 per capita. Now, that's double the national average. At my law firm, we have redomesticated scores of New York businesses fleeing this fiscal pressure cooker. A Manhattan fintech firm we moved to Miami last month converted to a Florida LLC in under 2 weeks, slashing property taxes by 40% while unlocking unlimited homestead exemptions that shield primary assets of the owners from creditors up to the full value, which is a remarkable difference compared to New York's cap of only $170,000 and change. Similarly, in Texas, we relocated a Brooklyn SaaS startup to Dallas, leveraging no personal state income tax and almost $7 million in Texas Enterprise Fund grants for its 300-job expansion, cutting overall tax load by almost 25% compared to New York's almost 9% corporate rate. Florida and Texas both have advantages. In Florida, we have zero personal income tax and very limited taxation for businesses, which could save a $200 million revenue company almost $20 million in tax payable annually, plus efficient court systems that resolve disputes in weeks. Texas is similar, offering no personal income tax, very limited business tax, lower commercial property tax rates in many cases, and incentives that can abate property tax payment up to 100% for 10 years on qualifying projects. The fallout multiplies. First order hikes squeeze margins, forcing layoffs. Second order, tenant exits out of Manhattan will further depress property values. Remember, New York's office vacancy rate hit nearly 20% in 2025, and a 10% tax boost could push it as high as 25%. Third order consequences. Budget shortfalls are already spiraling, which is how we got to this situation in the first place. And that's why we have these proposals on the table, prompting more levies on small and medium-sized businesses, repelling investment as VC and PE flows to Miami, Austin, and other nascent tech hubs. If Mamdani's plan advances without wealth taxes, we expect legal battles. But why wait? If you have the option, now is the time to redomesticate preemptively as part of a broader corporate and tax strategy to begin severing nexus cleanly and definitively. If you have questions regarding redomesticating your existing smaller or medium-sized businesses out of New York, out of California, out of Maryland, or other business-unfriendly jurisdictions, please use the link in the description for more information on this process and to schedule time for us to chat about your specific situation. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal advice, because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.